Hello everyone. Sound check. All good with the sound? How is everybody doing today? Okay. Well, back to the cooking board. Whatever went wrong with the website, I am tired a little bit of it. Anyway, back to price action. This website is still not working for me, so anyway, doesn't matter. Direct link should work now. I post the link again for those who have missed it. So let's see if we can get a confirmation. Let's check SPX. SPX had a minor, had a confirmation. So let's see if we can get some in ES2. So that would be 1045. Let's check our DLNs data. Long. Oh yeah, Yogi, can you send me the contact to via DM maybe? Okay, let's look at the DLNs data. I think everybody should have access to the stream now. The link is there. If somebody's asking, please share the link if possible, if I don't see it. And we're gonna dive directly into DLNs data. It's most likely to be a true day. It's a long day. We're gonna take Monday and we're gonna look, first of all, time retracement, median time, max retracement at 12. So we mark this and we have the extension timings 35. And now we will look for our retracement. So median max retracement is around minus 0.2. Let's look at the cluster. So the mode is 0 till 0.1 outside the DR. And then we have another cluster coming around here. So literally everything between plus 0.1 until minus 0.4 max. So let's mark this out. 0.1 must be somewhere here and 0.4 somewhere here. Yeah, no problem, not your fault. Let's check before high or low of the day. Let's see if we can get some confluence over here. So another one around 0 to 0.1 and another one around minus 0.1, minus 0.2. Yeah. Okay, let's mark this also in our chart. So minus 0.1 until here. Let's make it overlay a little bit. How much time? 20 seconds. So confirmation should be in now. Go back to lens. Let's check the extension levels. 0.5, 0.7, up to 1. Okay. So cluster around 0.5 to 0.7. And another big cluster, the mode is 1 to 1. Yeah, I will, Yogi. After the webinar, I will do it. So I have it already on my chart. This area will be very interesting. This area will be very interesting for the retracements. We are gonna check now the 0.5 standard deviation. It gives us the same insights, nothing new here. 0.1, 0.2 down to minus 0.2, eventually until minus 0.4. So I think that's fine for us. We have the extension, we have the timings. Let's check the retracement time distributions. As usual, between 10:45 and 11 o'clock, and then, yeah, like latest retracement should be around 11:30 to 11:45. So this area here will be interesting for our retracement. So around this area here. Okay, now we wait. Nothing more to do. Now we could check, do we have any drip confluence in the clusters? So as we can see, we have these two volume imbalances lining up here. So now we can fix that. That's till 0.2. Let's add the data. So we need nothing in the ODR, but we need 0.1 and 0.2 is enough. Minus 0.2. Ah, there it was. 0.2, 0.1. So as we can see, we're getting a little bit confluence here. So retracement area and this cluster of whips is harmonic with the data we are getting from DR lens. So that's definitely an area where I will look for what is happening there. Let's check to the left. Do we have anything interesting over here? So we have, that's ADR session here. Anything else? Let's turn off drift to see better. Let's mark this out. Potentially up here. And to the downside, we have nothing. Okay. So literally what we want to do now, we turn on drip again. We want to have a retracement, or I am looking for potential retracement into this area. And technically, the second area where I would look closer is around here. Everything we want to happen before the retracement is happening, before the time of the retracement is over. So before price is reaching this line. Yeah, I know, Bam, but I'm not looking at the daily for today. So Monday can be a very trendy day. So far, I don't see any switch. Everything here is quite pricing up. So far we have to wait if we even get a retracement. Can also happen that we just continue to go up and retrace on a high level and we will not get a chance to find an entry for a trade. Gonna see now. Yeah, for sure they can extend to it. But like at the end of the day, we already have our target area. So if I would enter a trade, my target area would be around these two data from DR Lens. So I would not go for any higher targets. Alta is asking, how far back do you look at the previous DR sessions? Just literally in proximity of where we are price action, you know? So we have already seen last week that this gap imbalance area here is very important. Price was bouncing up and down in between and now coming back at the end of the day. This blue area will be important if we go, like if price can come up above this gap imbalance, literally I think the way is free to go up here and we will have our next area which will be very important here. To the downside, we just have a lot of open volume imbalances, as we can see. So let's see, it's gonna be interesting. But let's focus on what is really happening in price right now. Let's just stay in the moment. And let's see if we will get a trade. As you can see, that was the marked area from the ADR session over to the left. So far you can see there is a little bit reaction from price over there. Let's see if it's continuing there. So I mean, literally we have nothing to do right now here because it has to retrace a little bit price. If it continues to go up more, it's not going to be interesting for me. So maybe we can have a look together at the ODR price action. What do you think? You want to do that? Okay, let's do that then. So just in case if I'm talking and then and I'm missing something, so somebody screams please in the chat if we retrace into these areas, else we can ignore a little bit. So today's ODR session was quite nice. I remove this for a second. Set alert? No, I don't know how to set an alert. You know, I'm a tech nerd. Okay, so ODR sessions, we are getting the confirmation here, which is reaching 0.5 standard deviation. So that makes it very easy for us. So we would go back to DR Lens and would check the data. So we select ODR. Confirmation was at 4 o'clock. So 4 o'clock was true, and we are looking at long true data. So when we look what we get here, so if we go into the max retracement distribution, we're gonna see 0.4 or minus 0.4 and minus 0.3 and 0.5. So this is a very important cluster. And there is technically another one at plus 0.1. And then we check also the retracement after we reach the 0.5. And it's giving us more or less the same picture. One is outside the DR around 0.1. And then the next big cluster is again around 0.4, minus 0.4, 0.3, and 0.5. And then there is another chance of big clusters which is below 0.7. So if we go back to our chart, literally, let me check there, that's looking good. So when we go back to our chart here, we have seen on the DR lens data that the retracement is either somewhere above or around 0.3 till 0.4, depending on how you want to draw it. And there's another big, another big distribution was around 0.8. So we know that these are the areas where we're looking at. So prices coming down leaves a nice volume imbalance over here, comes down here. So tell me, is that an entry? Is this sequence of candles, would that be an entry for a long? So we're coming into this area. Is that an entry? Okay, can you explain me why it's not an entry? Just for those maybe who are a little bit newer. Exactly. So there is no real rejection. We get one candle here, which is rejecting from the DR, but that's it. And then immediately the next candle goes down into our next retracement area. So this trade, it's not going to be taken. So what about this one? So we are reaching the next area. What is about this entry here? Will you take it or will you not take it? Yeah, I think this one is a little bit more tricky. I think you can take it, but it's not like a 100% take it. Yeah, you can take it because like we have a nice, we are going to the tick to the 0.3 standard deviation. So that's definitely our retracement level, what we are looking for. And the second candle is also rejecting from up here from the 0.2. So we have two 0.2 rejections with the bodies and one candle rejection. So this one definitely you can take. So where do you put your stop? So where would be your initial stop for this trade? Below mid IDR, below mid IDR. Yep. Perfect. Perfect answers. So the little bit riskier stop would be that you put it below the 0.4, but like the safe stop is 2 ticks below the 0.5. Perfect. Perfect, perfect. Okay, so, and now I want you to do something with me and look to the left side. So what do you see here? Yes, clusters of DR. Exactly. So we're gonna draw out this cluster. So we have, that's ODR and that's that's Friday ODR, Friday RDR. So we have one IDR, one DR, and the RDR, IDR here. So to make it simple, we're gonna just draw a box here. And we're gonna extend it over here. So can you see what we are getting here now? So now we are getting confluence inside the cluster level of retracement data from DR lens, also based on the previous DR levels. So now we have double confluence. We have our data from DR lens combined with the previous day ODR and IDR levels of 2 sessions. So that's why I wanted to say, when people ask me why I had my stop below the 0.4 level and not below the 0.5 level. That was the reason, because like technically I want, when price came down here based on the previous DR levels, I want this level to be hold. Yeah. I know per data there is a chance that we will go to 0.4. That's why I put my stop a little bit below, 2 ticks below here. But that was my reason why I went for the little bit higher stop. So back to the price action there. Let me check quick what is happening here. Well, we're just staying where we are, so no rush. So yes, you can take this trade. It's not picture perfect, but it's a trade to take. So price goes up. What are you doing when we are coming above the DR levels? What's your step after you see the close above DR levels? What you're gonna do? Especially when you see this volume imbalance here. When you see this volume imbalance, then you see the next one is forming here. What are your thoughts? Change stop loss BE, 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 exactly. So these two volume imbalances tell you, okay, be a little bit careful, move your stop to BE, or at least move your stop below this volume imbalance. Yeah? Because if price comes back here, we get a very good indication that we want to go lower. Exactly. So you would put your stop on break even. That means like you would not lose with this trade. Yeah. Very logical thinking process. Good entry down here. Price moves up. We are closing above the DR. We are leaving this volume imbalances right inside of the DR. And another volume imbalance over here. So we should be warned. It's like either this area will be completely no trespassing anymore, or when we go below it, we're gonna retrace a little bit deeper. Price comes back again, back to where you had your entry level in the trade before. So 1 rejection, 2 rejections, 3 rejections. What do I say about 3 rejections inside our cluster and everything? Is that enough to take an entry? Yes. So this was the cleanest entry. Yeah. And if we look, because somebody was asking me, I should talk about which candle I entered already here in this candle. So for me, just taking out this, coming back here was enough to enter this trade. But if you wait this candle, latest on this candle, you should enter your trade. Pineo, why is the first candle black? Like, we don't care if the candle is black, red, yellow, green, pink, violet, whatever. We don't care. For us, all what we are looking at is levels. So as long the body is not closing below our zones, in this case it would be 0.3 or 0.4. Yeah. We don't care about the color of the candle, but you don't have to take an entry right in this candle. So, but this candle already shows you the same. Look at the bodies of all these 4 candles. They are all exactly the same line. Inside our retracement cluster from DR lens, inside the previous DR levels. So we are rejecting literally not only from the retracement cluster, not only from 0.3, but also on top of the IDR level of the Friday ODR session. So that was the cleanest entry for this scenario. But like there is so much confluence there for you that at the end of the day, this is like, that was like a super high probability trade for you. Yeah. And the rest everybody knows, so price then extends up. And again, stop, even for this trade, same procedure. Either below here, 2 ticks below the 0.5 level. And I know there was a volume imbalance a little bit lower, I think. Yeah, here we have it. So it's also not a harm if you put your stop below this volume imbalance. Yeah. So you can put your stop over here, 2 ticks below the volume imbalance. That's not a mistake. That's a safe stop area there. If you want to tune your R a little bit, you put it 2 ticks below that. If you're very confident in the scenario like I was, you put your stop directly below the retracement level over here. So another thing we want to look at is, now we are going back to DR lens and check something. So again, ODR session, look at the median max retracement time, 5:35. So we know already there is another cluster over here. This time was already over. So both of the entries, if you look, the one is here 4:15 till 4:45. That's the first cluster. The second cluster is here. And now we look back to the chart and look 4:40, 4:45. That's our first cluster in the time distribution for the first entry. Then we go up. Then we go up. I will finish that and I will answer you. Then we go up and we go down and look at the time here. 20, 25, 30. That's our second retracement cluster. Going back to lens to show you again. First cluster around 4:15 to 4:45, highest cluster. Next cluster, 5:15, and the median is coming afterwards. 5:15 and 5:45. 5:15, 4:45, 5:15. Look at this candle, 5:15. So a lot of confluence here. Time, cluster, retracement, everything aligned. So that's really like, you can't take any high, you can't take any high, it's impossible to take a higher probability trade than this one. Even if you lose within, like with all of this coming together, this is a no-brainer. You have to take this trade. Just curious, why do you use 2 ticks below? Why that number? Or just, I'm using this for years, just simply because the wick sometimes wants to go to the level. So maybe, I don't know, it's just what I'm using. It's just that I'm not getting wicked out, so that's all. There is not really some, I never back tested if it would be better to use 3 ticks or 2 ticks. It's just what I'm using. Yeah, of course you can enter on the 4:45 code. Like that's the next thing. So even if you don't take the trade down here, so you know that your time retracement is 100% fulfilled. you know, then we are looking back to DR lens, and now that we know time for retracement is over, we are looking at our median SD extension. So we know that there is a level around 0.5, we have already seen that. So where are the next levels? 1.2 to 1.3, up to 1.7 to 1.8. So, and the median is 1.5. So even if you miss this entry here, you don't take the entry here, and price goes up, we still have DR levels here. Yeah, DR levels are your bread and your butter. They are more important than, I wanted to say than your girlfriend, but I'm not saying that. But these are your best friends. So even if you miss this entry, I mean, this is talking a lot about price action, this candle over here. So if price goes up here, we are closing above the DR, and we are rejecting 1 time, 2 times, 3 times. That's your go button. You can take this trade. Look also what we see here. Rejection, rejection, rejection. So we're going up here and we're getting the same again. Look at this. Up, down, up. We are reaching 1. We are returning here. We are bouncing from here. So there is so much, even if you don't catch this entry, but like still the facts are staying the same. Let's say you're going and getting a coffee. You're going and you're getting a coffee for yourself and you come back and you miss this entry. Like the next best entry is we take back the DR, we are looking for a long 1, 2, 3 rejections, and here we go. That's the point where you enter the trade. Stop below 2 ticks below the IDR. Because at this point, maximum retracement time is over. So to keep our trade high probability, after the retracement time is over, we don't want price to come back or close even below the DR anymore. Yeah? If we would go down here, probability of the trade is going down. Just very simple. And then you go, like you saw, I chickened out. I actually had the 1.5 retracement initially, but maximum extension time was over here. So I chickened out. I missed this whole push up there, but it's okay. It was 3R for me. I'm very happy about this. But as you could see, there was also like more and more entries. Would I take a trade after we reach the 0.5? No. And even here, look at this 2 standard deviation. I mean, I can show you lens again. That's the 2 standard deviation here. So everything worked out quite perfectly in the ODR. Yeah, I mean, the point is people think you're missing something, but like literally, I think if you take this trade, the third entry, and let's say you enter on this candle, and you have your stop over here, 2 ticks below IDR, and you go for the median extension, you made more R than I did with my perfect entry. Of course, my risk was very quickly. So forget about don't FOMO. It's all is about being aware, reading price and understanding price. And what should be in your head is very simple. Confirmation, and we fulfilled all the retracement areas. Time for retracement is over. So for a high probability trade, from now on we want price to go up and not retrace any big moves anymore. So, and even this entry was a very good entry. So literally, like I said, I had the perfect entry, as you can see, but I made less R than people who would have entered here. So it doesn't matter as long you follow a strict plan and you know what are the reasons behind your trading, that's all you need to understand and to do. Yeah, like honestly, it will be part of the frame, but everybody who's not waiting for a confirmation at this stage of the academy, I'm not like, this can change, but where we are right now with the academy and with the teaching, waiting for confirmation is a must, in my opinion, because confirmation gives you 80% probability that price will not close below here. So you have a free ticket into the right direction out of 100 days, 80 days. If you don't take the confirmation, you're just reducing your probabilities. And especially for those who are newer, who are not so experienced in trading, they should focus on the basic. But I will give you the framework. Tomorrow is going to be the frame, which gives you a framework which you can use and follow to the tick for the next 10 trading days. And I can guarantee you almost that it's going to make you some profits. Any questions to this day or to this ODR? Smart money. Smart Money Punk, why don't you use the filter? I don't know, like it was not so important for me to show, but you can use definitely the Newsdays filter. It has, like for those who haven't seen, we had a nice update on DR Lens. We have now the DAX futures inside. We have the Euro future, the British Pound future, Bitcoin, and Euro Yen. So we added more instruments. And off top, we have now this button, Remove Newsdays. So it takes out all the newsdays I consider important, so CPI, PPI, FOMC. And if you take this button in, you have the advantage that all these extreme values, which are normally happening, they are not in the data field. So your data gets a little bit more precise because we don't have all the news days on PPI and on non-farm payrolls where we go to 5 standard deviations and all of this stuff. So if you want to have the reliable data, it's this, but it's 2 years less because like the data with the news starts in 2007. So we're losing 2 years of data, but that's not a problem, I think. For those who like ODR, yeah, I'm watching price, don't worry. For those who like the ODR session also, like my hometown indies DAX, have a look at it because like it's just amazing. So if you look at the ODR, let's take the time out. So it has a very high probability overall. So if we go into the dashboard, 90% almost for the ODR session. So if you're trading actively the ODR session, you should really have a look at the DAX because it's really, really strong data. FDAX. So you take the future DAX. I can show you. Let me go over here. It's this one, FDAX. That's the symbol. Look at this. That's the ODR session we just looked at. So price in the FDAX is coming down here, retracing up, bouncing away from here, going back, staying up here, and then rockets up. Really nice one. So anyway, like very good if you want to trade ODR session, always worth to consider for a trade and look at it. It's behaving more or less like the US futures, but it has a very good data set. Just refresh. I don't think that we can... Yeah, you can trade it, Syed, with any broker. There is an FDAX, which is the big contract, and they also have a mini contract. If you're listening to Rocco Grave, then good night, Smix. I never saw anyone worse than this guy, to be honest with you. Yes, Stingray. Here, make a screenshot from my screen. FDAX, here, FDAX future. Okay, back to the price action. Let's look at the tick somebody said. Nothing going on. We reached the high over here. So we reached the extreme in the tick chart. We are going below the 50% and now we are going down. So that was like the imbalance here. So price is going up. Price is doing this while tick is doing this. So it's an imbalance, which confirms that we are most likely going to see a retracement now. Alien Human, you can just go on drip and you go on reset settings and you will get exactly my settings. Because like the indicator has my standard settings as standard settings. So if you go reset settings, you're going to get exactly what I use. Divergence between tick data and price, so you trust the tick, right? Well, there's nothing to trust because we are not looking for a short, but at least you get the information that that most likely was a high for now. So you're not going to take any longs here because you see the divergence here. Also interesting if you look like what we marked before, so ADR, IDR and DR high. We had a quite nice reaction over here. 1, 2, 3, 4 candles. So we didn't reach into this area now. Now I move this. So we didn't even come down to 0.2. Let's check lens data again. RDR Monday. Okay, when we look at the 0.5, which we have not reached, but I'm looking at this, we should come more down. I don't think that we will stay above. Ah, that's DAX future. I was wondering why it was so nice. Yes, so you can see on price, like if we would have reached 0.5, Monday has a high chance that it will stay outside the IDR, but yet we don't have 0.5. If you look at the median max retracement, there's literally only 0 to 0.1, so the level I have already marked on my chart. So we're gonna keep on waiting. When you guys make this red sign, does it mean there is no trade, there's no stream, or it just means no, you have the stream? Because like on me on Vimeo, it's showing all Gucci. Yeah, okay, thank you. Just whenever it goes down, just refresh it, it should work, because like it's directly with Vimeo. Look also the nice confluence over here, nice whip gip rejection over here. So let's see. So that could be a potential algo switch for those who have listened about what I talked here. So now you see the tick is coming down below. We are pushing hard right now. And we are coming to an area where it's potentially interesting. Time is okay, 12 o'clock. We have 11:30. Ah, okay. Now I understand, Bam. Thank you. It was in the MSC chat, Jacob. Just go through my chat what I was writing in the MSC chat. But don't worry, I'm gonna make this anyway separate again. (1:28). We are waiting. What we like already is that tick is already down here. Yeah, Syed. I don't know if anything of the normal retail concept is anywhere derived, because at the end of the day, yeah, you can say that. So to the tick, to the volume imbalance with the wick into our area here. Yeah, I would like also to see something around here. But let's see. Could be a very strong day that can happen. But we are patient. Still have time for the retracement left. Another 25 minutes. So let's say we would enter somewhere around here. Where would you put your stop loss? Two ticks below DR. Okay, 2 ticks below DR is very aggressive, okay? 2 ticks below IDR would be yes. Wouldn't it be better to have 2 ticks below this volume imbalance? We also have this volume imbalance, so I would put my stop most likely below the volume imbalance just to have another security layer where price can bounce off, right? If you want to avoid any further risk, you can also put your stop below the dark green shaded area. So where would be my second entry over here? But then is the question if it would be enough for the risk reward ratio. Let's say we enter around here and we could put our stop potentially here. And then we go for the one. Yeah, it would be still okay. You see? So if you put your stop below here, you're literally covering two scenarios where you want to enter with one-time risk. So that would be also an option. Let me look at the SPX for a second. I think we closed the gap. Oh, we still didn't. We have a gap up here, which will be a good target for the coming days, I think. This gap definitely needs to be closed. So if gaps are not getting immediately closed, they will be closed within like, let's say 7 days, or like a week of trading. They normally get closed. So the longer it stays open, the more magnetic it's going to become. I need to don't trip off. I don't see anything here. You see this here aligning with our DR, IDR. Gaps normally happening only in the SPX, and the SPX doesn't have. So the question was, so the ODR and the ADR don't count with all the gap closes. The SPX only has RDR. There is no ODR or ADR. You know, like look at this. So I don't turn on the drip indicator again. But look at this. So this is aligning. I removed the line. So this IDR level from Monday last week is matching almost exactly our DR, IDR levels of today. So that's the green line. Then we can take another line. Oh, well, let's draw a box. Let's make the different color because it's not a whip. So look how this is aligning here. And then look where this box is going through. This was an up gap. So that's the blue shaded area we see when we turn on drip. And it's aligning also there. So there's a high chance right now that this was it. Could be that the retracement is done. So what was the question? Can you explain the divergence with the tick grid? Literally, it's very simple divergence for tick grid. So everybody understood what I said. So there's a good chance that this retracement was it for now. Look at price. So price is going up. You see price is going higher and higher and higher, right? You see that? ERW. You see that? Price is moving up and up and up. While tick is doing the opposite. And that's called a divergence. So price is going up, but the tick is going down. And that's what we call a divergence. So you can simply draw a line, price is going up, and here price is going down or tick is going down. So they're moving opposite. Normally they should work in the same direction. So if price is going up, tick should be also going up. Yeah, so technically here something like this, yeah. Should be the same angle than the price is going. If this is not the case, you have a divergence, and then either it means this is a fake high, or it just simply means we're going to go into a retracement like what we have seen right now. Would you look at it? Merlion, would you look at the histograms cluster of time of the max retracement the same way you look at SD extension level? I don't think I really understand 100% your question. Can you show me a picture or something like that? So it's pushing higher, but tick is also going very fast. So as you have seen, it's also happening to me. So I missed this trade because I'm talking to you, I'm looking around, I'm answering questions, and literally what I just showed you on SPX gave me the clarity when I saw it that most likely we will not go below this area, but I saw it too late. So when I showed to you and when I told you, oh, now it's a very high chance that we will go higher, it was just too late for me to execute on my account. But you see, that's happening even to me. Sometimes, you really have to be focused and 100% with the price action and see everything. So I was busy talking to you, looking around, explaining stuff, and now I missed the entry, which was very clear when I draw this and I was explaining it to you. You heard what I was saying. I was like, that's now a very, very high chance. Yeah, I'm happy. I hope somebody catched it. But just for you also to understand, this is not bothering me. Yeah. That would have been a very nice trade, but it's not bothering me. It's fine. I know I will get other trades. I will find other entries. Yeah, nice, guys. I like it. I like it. I understand that SPX, maybe a Facebook question. Bam. No, like the SPX fills only the gaps in with the SPX session. So no, it can't be filled with the future. Justina, so you said that you chickened out with holding the trade longer in the ODR. Is there going to be a DR mine for that condition? I was just joking, you know, like we have to be realistic. Taking this trade down here, selling exactly at the 1 point standard deviation, it's not really chickening out. My logic was very simple because time extension was 635. So from the moment when we go over 635, everything which else come is lower probability than before the time. So it's not really chickening out. I was literally choking when I meant chickening out. That's the logic consequence. Like, yeah, on this day you would have taken more out of it, but I can tell you over 1,000 trades, following this rule or doing it like I did will make you more profit than one day where you catch the big move. Yeah, because you're just playing probability. So we are reaching our first cluster. So there's a high, there should be like, now we even are smarter. So look at this. So time median retracement is 10 minutes away. So technically that should have been, if you want to trade high probability, what we see right now means that was our max retracement if this is a high probability day. So we don't want to have any more retracement below this level. Except we're having 2 candles where it's going down now. You understand what I mean? Is the logic clear what I'm talking about now? So you can see with the progressing, when price is progressing, you get more and more insight in what is high probability, and if there is a better chance to stay out of a trade. Because at the end of the day, we know time is over here. So that means we have seen our max retracement. Whenever price comes down to these areas again, it means your probability goes down. So any stop on this level would be very logic right now. Because once we come below this level, the scenario for low gets less probability. Knivko, please could you quickly recap why we did not wait for a deeper retracement? Well, like there are certain things. First of all, we had the tick divergence, the tick low extremes with this candle. Then we are reaching the cluster, which is completely okay. We are reaching 0.1, which we saw in DR Lens is a very good cluster. And what I have seen, what made me then wanting to take this trade is that the SPX does the same, but I saw the Mondays last week, high and IDR and DR, and I pulled it over here. And like this one is also matching the edge of this big gap. So when I drew this out and I saw that together with what we extracted out of the data, it was clear for me that price wants to go up. And that's what I said, but I didn't execute on it. But that's the logic behind. Does it make sense? Yes, BE. Yeah, my stop would be already on BE. Yeah, for those who didn't take this trade, look, we are in one boat. I didn't take this trade neither. I would have taken it for sure, but like I was just too late. I missed it. Like most probably 50% of all the other people here. Same. And I'm super happy, you know. I'm not crying, I'm not frustrated, I am not angry. I'm actually in a super good mood because I can be happy about looking just at nice price action. Makes me also happy. Yeah, correct. Nice observation. We have a little volume imbalance over here. But again, like if you're looking at price, so if price comes back to this level, I wouldn't like it. So either we have really a strong trending day and we keep the market structure higher high, lower low, higher low, sorry, higher high, higher low, or we don't. And look at this tick. The tick behavior is very nice. Tick is coming down quite fast, while price is going slowly down. You want to see this if we are in an up move. You want to see this tick behavior and price lagging a little bit behind. At Arvik, we already checked the 0.5 standard deviation data, but I can have a look. So if we take the standard deviation, max retracement for the 0.5, we will see that it's like 0.3 and 0.4. 0.2, like literally above the area which I said we should not go. So that's the max over here. But we have a problem. But we have a problem time-wise. Because like we should not go lower than this level anymore, in my opinion. Because the time already for the max retracement is already done. So we can retrace everywhere in between here, but we should not. So I'll show you on the chart, we should not go below this area anymore. Maximum really filling this volume imbalance over here. But we don't want to break this level anymore because the time is already all over, 11:45. We should not see any bigger retracements anymore than like in this area. I'm seeing different data with the day filter. I don't know, like I am right now in our developing data. So can somebody confirm? I have unfiltered. That's why you have different data than me, because I somehow went to unfiltered. Because I showed the DAX. Sorry. So let's look at again if there is something, if something is changed. 0.1 to 0.2 and 0 till 0.1. Yeah, still the same logic. I'm going back to Lens. Sorry, I had the wrong data because I switched to the DAX. The same logic applies, what I said. 12 o'clock time is over for the max retracement. So if retracement is coming, it should not go below the area I just showed already in the chart. I mean, it's still possible that we go down and then we go up again, but Merlion is asking, no, we are not only using the median level, but of course, like to understand, like, I don't know, maybe some of you don't know, but like if we are talking about a median or the median calculation of a frequency distribution, it means literally the median is the point where we reach 50% of all distributions in the histogram. So it's always an important point because like once you go with the median, everything, like you have 50% of all distributions inside this value and to the left side. So no, we are not taking the median, we are taking the clusters. So as you can see, if I go back to lens, the median would be minus 0.2 and 0, right? So we are looking at the distributions and we are taking the clusters out of there. Yes. Tommy Trader, yes. Dines, he's asking, no, not Dines. Can you tell me where I can watch the live sessions there? Every Monday, Tuesday, and Thursday, 1 hour after New York opening. So 10:30 New York local time, every Monday, Tuesday, and Thursday. So now it's the opposite side. We had seen tick coming down fast while price was slow. Now price is coming down while tick is not going more down. So it's like calibrating again. I still, in my opinion, I don't want price to go below this level anymore. To be very confident in my longs. Anyway, those who have taken this trade should have taken already some partial over here, right? At Ghost would be cool to filter only FOMC CPI. Yeah, we're gonna do that. Don't worry. It's coming, it's coming. Dennis, yeah, I would have taken a partial over there. Next, I don't know. I never used the IB data because I never liked them. Even when I was not using TradingView, when I was using eSignal, I didn't like the data quality of IB is not like super good. No partials until 2R, yes. Like if you enter late into this one, but like normally you should have taken the trade around here. Stop below here. So it would be already 2. Yeah, if somebody has the problem, but actually why I'm talking to people who have problem, because most likely smart pants, the people who can't watch the stream can't hear me, right? Metacognition, I say. I figured it out. Doesn't make sense that I talk to the people who have problems. Ha ha ha. Word, I always look at unfiltered data, but normally for the stream I prepare already I already prepare unfiltered data for the time, especially when we have like such an RDR like we had today, where I expect a very quick confirmation. So to not spend like 10 minutes explaining you, because I also like, believe it or not, I'm trading my own account. So to save some time where I have to go through data, which I do for the 50th time, I look at them before the session starts, so I don't have to do it on live stream and I can be more focused on the price action. Because still, as somebody, the people who know me for long enough now, they know that actually RDR is my main session where I take trades. So I'm just trying to be efficient, streaming, explaining, and still being focused enough to also take decisions for my own trading. So time is over for the retracement now. We can remove this line. Like I said, scenario stays true. We are waiting. Yeah, we didn't talk about the models of the session yet. Let me get something to drink and then we'll talk about that quick. So I'm back. Yeah, in general, like, because I see the graphic in the chat about the zero retracements, like in general, as a rule of thumb, please, not everybody now does this every day, but like in general, what I have in my mind, Monday and Fridays have a good chance to be trending days. So it's a good chance that we will go not into big retracements. Not like a 80% chance, but like there is a higher chance than on the other days. Malion, because like I did this, the main session for me at work was RDR. So literally everything ODR is normally just playing around. So that's just from the old times that I prefer, or like that I trade the RDR session. And before I started Academy, there's literally no reason for me. I enjoyed my day and traded like 2, 3, 4, 5 hours in the RDR session. So it was very convenient. Yeah, and Wednesday has the highest chance of being a false day. That's true, but still, like it still has a probability of 73%. So yeah, that's like so small tits and bits to think about. Well, right now, I just like there's nothing to see in price, so still the same. For me, very important. We should not go below this for the long trade. Whenever we go below this, I would be losing interest in today's action, I guess. I would maybe look at these levels then. But so far, like for the perfect scenario we have seen, time for the retracement is over. Now I want to see extension till we reach the max extension timings, and then I would be happy. Tick is fine, there is nothing crazy happening here, like looks super clean, like price, up movement, retracement, and now we should hopefully extend more to the upside. But else, nothing interesting is happening for me here. Like everything is in check, pricing upwards, nothing special so far. I mean, as we know, that can change in a millisecond, but for now it's very normal, boring price action. Would be nice if price takes these clusters now, then we only have this, and then the way to the upper max extension median is open. So price definitely has to go through this. But like I think once we go over here, then we have more or less like a freeway up to 1. And that would be also perfect scenario. We just go up within the time limitation and we reach 1 point. And then if I would have taken this trade, I would be out and would be calling it a nice day. If that makes sense. Bam, you're welcome. Uh, Arvik, wasn't this an opportunity to enter the long or too risky? For me, like if we don't see a proper retracement and not really like proper rejections from important DR levels, I don't like entering into like such a trade. But that's up to you. I mean, but you know, you have to come to a point where you say, like, what I explained to you is very simple. So if I want to take trades, if you want to take trades, especially you, because like for me, it's not so important. I know what I'm doing and I know how to trade in any scenario. But for you, what you want to do when you're trading, you literally only want to take trades which are in all the parameters, because if you wait for confirmation, you have a high chance, or like you know the direction, and the chance that we will go below here is less than 20%. So you're stacking one probability. Then you're using your DR lens data and you're stacking even more probability. Then you take time into consideration. So the retracement should have been over with this candle. Another probability you're stacking. And now you just want to see price extend here. If it does that, you did everything picture perfect. I think if you took this trade, this is already a big win for you and you should mark this in your journal. Because based on everything what we discussed with the data, with price action, this is already the trade to take. And now you leave it to price. It's not your decision anymore. Like you can't influence if price will go up there, but you from your side, you already did your part. And if you do this 100 times, you're gonna have at least 70 winner. Out of 100 trades, you take this trade, you have 70 winner. And I don't have to calculate that for you. So that's what you're looking for. Right now, there's really nothing to do. Right now, everything done perfect. If you took this trade down here, if you understood it, if you have not taken it and just seen it, that's already a win. You know, we are not even, people forget, we are not 14 days into the academy. Everything so far today was picture perfect, and now it's only up to price and the market to decide. There's no more influence for you. You have your trade, you have your stop on break even. You just either it's going up and you take your whatever 5R, whatever you're gonna make, or it's stopping you out and that's it. But like you did everything perfect, and what you really have to get into your mind and tell this every day, if you need to do this 100 times, you're gonna end up with at least 70 trades who are winning. There will be trades where you're losing, there will be trades where you will get stopped out. But once you nail this down and you have it, put it into your brain and it's definitely sitting there, you're gonna have 70 winning trades out of 100. And that's a huge, big number. At green trades, I'm not looking at dojos. Like I'm really like, for me, mainly when I'm looking at price, for me, candles are what is important. So bodies, the wicks, I'm not really interested. That I don't know, Dennis. Maybe you have to first get the allowance, because on IB you can set up which futures you can trade. You can go into your account settings and you have to activate that you can trade, and you have to sign the exchange documents that they allow you to trade it. I guess that's the problem. So I would like to talk more, but as you can see, there's nothing to talk about. Everything is okay so far. Can you see how even this retracement and extension clusters are important for price? Can you see that? Once we reach them, okay, we have the 0.5, but like you will always see that sometimes price is also reacting to the clusters in DR lens. Jim, but if the retracement into the DR has 86.1, should we not also look at this over all the data that has the highest percentage? Yeah, you can look at this, but like what I'm talking is considering everything we have seen. So time is over. So like if we really should go back into IDR, it's not an interesting day for me anymore. Even though I have the statistic retracement back into the IDR, but consider 20 years of data. Yes, it sounds good, 86%, but like when you go forward and you take all the data into consideration right now, what we want to see is price extending up. The stats is there, I agree with you. My green line, no. I don't want, like, don't like this. If we would have come down more with the retracement, I would consider entering here, but like, this is just, there's not a lot of space for me anymore. Like, I don't like entering trades when I miss the good entry, except it's like a certain scenario where we know, like for example in ODR it's a different story because the second entry was on the DR levels, right? So, and on the ODR my max extension level was 1.5. So this is a different entry where you can take an entry later on. Here I don't want to enter because like there is not really a level I can really 100% take. Yes, we have the previous one, but like you see, like price is not, it's reacting to it, but the level of entering here and levering on a DR level with 100%, like where would you put your stop? If I want to trade here, let's say here, to be sure, I need to put my stop somewhere here, right? Because that's the level where price, actually, to be 100% precise, the stop has to be here if you enter now. And this is, it's not even 2. So either you go risky and you say you put your stop, let's say here, or you put it here, but that's a very risky trade. Yeah, we can turn on this one. But even then, I mean, the point is also entering here when you have all the VIPs and the GIPs over here, like that's always a possible area where price can turn and come down lower and retraces, like let's say to the edge of the gap imbalance. So I don't like to enter trades when they are in front of those clusters, right? Because you always buy yourself into a trade which potentially could just bounce from here, go down here, stops you out, and then goes the way. So that's why I personally not looking for a trade at these levels. Even though, I mean, I'm fine. Like, you know, that's what you also have to understand. If you miss a trade, it's fine. It's completely fine. Look at it, learn out of it. Because like the point is what you should take away from this one is that those kind of trades are happening when you see all the confluence. So you should have already learned something today. And the second point what you can take away is that like it's even happening to me that I miss trades. But I don't need to jump on this trade anymore. You know, because tomorrow we will get another situation, the day after we'll get situation. I mean, a lot of people made already 3 to 5 R here. Me personally, I made 3 R. So I don't need to trade anymore, and I missed this entry because I was not paying enough focus to what was happening here. So, and that's it. I'm fine with that. Yeah, tick is going retracing nicely while price is staying quite stable. JTGR, are you more interested in the retracements happening before extension, 0.5 extension? So our probabilities are increased? No, not really. Not really. I'm just looking for the highest probability setup. So like today with confirmation and retracement based on the double cluster, what we have here and what we have seen on SPX, I would consider that the first important entry. And then when you take time into consideration, then it's the perfect trade. Doesn't have to do anything with the 0.5 extension or not. No, just the RDR. It's at 8:30, yeah. So you should be out of any trade at 7:30, but anyway, don't expect too much happening before the news is coming out. It's not it's normally something which should not consider you, but like, is it really tomorrow? Let me check. No, there's nothing tomorrow, or I'm blind. No, tomorrow is nothing. Why I don't see CPI? I don't hear. No, there is no CPI tomorrow. Ah, here we have it. Yeah, I found it. Yeah, so tomorrow at least like 1 hour before the news comes out, stay out of the market. In general, don't expect anything big happening tomorrow in ODR. If I can give advice, stay out of the market for the ODR maybe. And then afterwards we will see. I mean, we have a live session. We're going to see what's happening. We're going to see. I will tell you when we have the live sessions, but definitely before and immediately after. So anyway, we are starting at 10:30, so it should be fine. We're going to see what's happening. Dennis, maybe DAX for ODR. Yeah, you can try it, but you know, like DAX is already like it's kind of synced with the US markets. So if there is something going on, like CPI is like also for the DAX in an event. Okay, guys, 2 hours over. As you can see, good but boring price action. I guess that's it for today. I leave you with the trade. Enjoy the rest of the session. If there should be something happening, I would put it into my blog. But like I said, I wish everyone who is in a trade, I wish that we will see a nice extension till the time is over. Take care of your stops, increase your stops to break even at least. So there is no need to lose anything with this trade anymore. And then I'm going to see you tomorrow, same time, same place. And now I'm going to check what the heck is wrong with the website again. Thank you guys. Bye bye.